Welcome to this tutorial on a stock screener called Stock Fetcher. I'm going to share with you a very specific screen that is really great for finding excellent stocks in a particular technical analysis configuration. I'll share with you in just a moment. But first of all, this is a part 2. You're welcome to watch this first if you want to, but it is a follow-up to my video, How to Choose Stocks for Swing Trading. I'll put a link in the description below, and you can go check that out afterwards. So that one was really a product review of Stock Fetcher, and I got so much response of people emailing me saying, hey, that's all awesome, but can you show us a specific scan or screen? And so you spoke and I listened. So yep, here is one. All right, so let me show you how this is called the double stochastic short. All right, this is one of mine that I created. They do have pre-made filters as well. They call them filters instead of screens or scans. Just a different term for the same thing. Let me actually show you the formula. Let me move this over here. Let's see, give you all the goodies. All right, there you go. All right, so yeah, here we go. This is the formula. And let's go through this. And, you know, instead of you having to write all this down, don't bother doing that. I will also put a link in the description to a page on my website, and I'll put a link on there with a text file. So you can just copy and paste this if you'd like to. How's that? Do I help you guys or what? Yeah, make it easy for you. Okay, so let me explain what this is first of all. So, by the way, you can just copy and paste this once you get it. And this is what I like about Stock Fetcher, because I am not a programmer. And as you can see, it's not really programming language, but I'll explain what it is. So, show me stocks where the double stochastic, that's our first indicator we're going to use. In the settings there are 10 and 3, as you can see, so that's already set for you, is above 70. Since we're going to be going short, then what we want to do is look for a stochastic that is very high. We want it to be high because we're going to be going short, what typically is called overbought, even though I hate that term, but that's kind of the idea. Then we want to make sure that, okay, not only is it at a high level, but it's angling down. So it's been decreasing for 1 day. We're looking at a daily chart here. So it's now gone up to a very high level, the infamous overbought level, and is now sloping back down. Okay, so that's indicator number 1. Now on indicator number 2, the 50-period simple moving average. I'm putting there that the 2-day slope of it is basically down. That's what that means, below negative 0.01. So I want that 50 MA to be sloping down. So long term, what that means is the stochastic is an oscillator and it's a very short term. So now we're looking for the long-term moving average to be down, 50 periods. And then, by the way, you can edit this to what you want. So I put in here average volume over 90 days is above 50,000. Now, if you want to put 100,000 there or whatever, obviously you can customize this and you can customize the price. So I'm only looking for stocks between $10 and $80. Again, feel free to vary that if you want the only low price stocks or higher price stocks, whatever. Now, I added on to this also, and oops, I see a little typo there actually. Okay, let's remove that. This is the cool stuff when you teach. So we click over here on edit. They say if you want to learn something, teach it. So this should be the word and, actually. All right. And the CCI for 14 periods has been decreasing for 1 day. All right, so I'm going to save this. Just save it at the same one. Cool. And then we've got, let's see, the weekly CCI, 14 periods. So now I want to look for concurrent time frames, right? Not just the daily chart, but now I want some sort of indication that on the longer term time frame, in this case the weekly, I'm going to use CCI as the momentum indicator here, that the longer term momentum is also going down since we're looking for a short. And we're also going to require that on the weekly double stochastic, that it is also angling down on the weekly. So cool thing is, you can see, and that's one of the things I love about this, is that in one scan, you can look for certain parameters, filters, as they call it here, on multiple time frames. So there are some scanners out there you have to scan first on the daily chart, and then you take the results of that and you run it through a weekly scan. That's okay too, but hey, it's so much easier just to plug it all into one formula here, right? And so there we go. All right, so let me take this off. Let's run our scan. Actually, let's see. Let's just make sure we got that saved. And we're going to click on Fetch Stock. So let me move the window over again a little bit here for you. All right, I think you can see everything there now. Yes, so we're going to fetch stocks. Okay, and they're the same ones. So I think the formula actually accounted for my faux pas there. Okay, so we'll take, I like this one. It's moved down the most. And as you can see, the price is within our range. I like that this has a lot of volume. It has the most volume of the four. You could click on any one of them here, but again, just to give you an example, let's pull up a chart. So here's what we got. Here's what it looks like. And now let me bring this back up. My annotations. So the 50 MA is my purple line. I get my arrow. So that is angling down, just like we said. All right, here's our double stochastic. You see that's angling down. It's above 70 and angling down. This is our CCI, again in the formula, angling down. Now, this is our weekly CCI. See, it plots it right on the same chart, so you don't even have to look at two charts. So that's cool. It plots both the daily and the weekly indicators on the same chart, and that is angling down. All right, and so that's awesome. We got all these energies going down, the 50 MA, boom, boom, boom. Oh, I do have to, I can see, move the chart again, so I got to take the annotations off. Actually, now I'm going to have to move the whole screen capture. Anyway, no, you know what? I don't think I can do that. All right. Well, anyway, unfortunately, I can't point this up and down here. This is the weekly double stochastic it's off the screen capture, but it's angling down too. Okay. So yeah, that's what we're looking for. Now this line down here, let me use, sometimes people say they can't see my little arrow there. So I got to use these and draw them right on there. That is the 200 period simple moving average. All right. And so we got a nice candlestick bar pattern there as well, don't we? And this yellow line, that is the 100 period simple moving average. And so this is what in Top Dog Trading we call the pinball pattern. We got stuck into a pinball pattern here. And the pinball pattern is when you get stuck between the moving averages. So the four moving averages I'm using here are the 15 EMA, the 50 SMA, the 100 SMA, and the 200 SMA. And this is a common pattern that we find a lot where we will get stuck in between these moving averages. We just got to pinball between them. And then we look for a breakout. So it is a type of expansion contraction pattern similar to a Bollinger Band squeeze, but it's more of a moving average squeeze. And then we're looking for a, boom, breakout of them. And in this case, we'd be looking for the breakout to the downside. That's one of the questions people always ask is, well, when we get into these contracting patterns, whether it's Bollinger Band squeezes, triangles, whatever, or in this case, a pinball pattern of the moving averages, how do I know which way it's going to break out? Well, of course, there's no certainties in trading, but the way we're going to decide it this time is, or the way I would decide it at least, is based on all these energies going down, both on the daily and the weekly. And of course, having a nice candlestick pattern there doesn't hurt either. So there you go. There's a specific scan for you. By the way, I got to be very, very clear. This is not in any way, shape, or form a recommendation or a I'm not taking this trade, by the way, just to let you know that. I will not take this trade. So I have no financial interest in it. But on the other hand, I'm not licensed to give any particular trading advice. So this is just for an example. And I'm not recommending that you take this trade or any other trades, buy any stock, short any stock, blah, 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 blah. I'm not a licensed financial advisor. Before you do anything, seek out the advice of a professional financial advisor. This is just purely for illustration purposes only. But yeah, if you want to try that scan, try it for yourself over a large sample of data, see if you like it, maybe paper trade it for a while. Yeah, see if you like it, see if it works for you. And again, that's totally your responsibility, not mine. All right, now that I've legally covered my butt, seriously, that is important. In the next video, I'm actually going to dive a little deeper into the double stochastic. I'm going to show you a very cool pattern that I discovered on the double stochastic that I really, really like. So that'll be coming in the next video. So that'll actually be kind of a part 3, I guess, of this series. If you liked the video, if you got something out of it, if you thought it was good, then share good things with good people by clicking on the share button below. Also, I am giving away one of my favorite trade strategies called the rubber band trade. And that is a complete strategy where it is a complete technical analysis setup, the entries, the exits, the protective stops, everything. It takes me a little longer to explain all of that, but I'll give that to you absolutely free. Just click in the top right-hand corner of this video. There's going to be a little image there. Click on that, and it'll show you exactly how to get that absolutely free. It's one of my little mini courses for you, actually. And yeah, I like to, as you can see, give things for free. And by the way, also, I love your comments. Click the like thumbs up and give me some comments down below. Let me know what else you'd like to see in the future, what else you want to learn, if you like this video. And I do this for free, so your encouragement is much appreciated.